Hello, Warriors. I hope everyone had a great weekend. I hope everyone also learned a lesson to be flat during big red events. I talked about it with the Fed the week before. I talked about it with the BOC, Bank of Canada. This is what happened with the Bank of Canada, this candle right here. So, this is when you could throw your charts away. That was the Bank of Canada. And this was Dixie after the number. No one could have predicted that number. No one did predict that number. Most of the market was looking for over 1 million jobs created, came in at 250,000. So, it's not a surprise that the dollar sold off. It's not a surprise that gold and silver continued their rallies. And it's not a surprise, hasn't been a surprise for years that the S&P has also made a new high. Um, what some people might be surprised at is another new high in S&Ps with stalling out in the Nasdaq at 13.8. And I had said on the S&Ps that if we got through 4180, that was this level right here, that we would see a new high. So we'll see. I'm not sure this is it. I know there are some very good Ellioticians I respect talking about 4,300 and talking about 4,400. So we'll see. I think it's possible. But, the question I have for traders right now is what was the move in the markets on Friday that really has been underreported, underanalyzed, really not talked about, that I think could be quite significant? Anyone have any guesses? You could either write it down on the YouTube chat, which I don't have up, or I'd prefer to have it in main chat to communicate with you. I have any guesses on what that market may be that was really no one's talking about it, and it could be quite critical to the structure of all different markets? I'll give you a couple seconds to take a shot at it. Um, Gil, do you know? Tim, do you know? Mike, I bet Mike knows. What do you think it is? All right, 5, 4, 3, 2, 1. All right, I'm gonna unveil it. Okay, so I think the most significant move that took place on Friday, even though they were all real nice moves, and I didn't come in short the dollar, I was flat. But look at what happened to the yields on a weak number. Here's your 10-year yield. We had this big spike, a shade under 140, 150 to 148. And when you look at the day, the number didn't change, but we held very significant support in the 10-year yield and fought its way back to a reversal candle. You have a blue candle there on the daily, right? So I could say a couple of things. Back under Friday's lows, you're going to see yields really come off, but it's also possible that the surprise would be a new high in yields. And that's going to affect certain things like metals. And, if it's all about yields, right now you're getting follow through strength in metals, follow through weakness in dollars. But if you start taking out this high and we start trading near 2%, it will get the market's attention. And I don't think anyone's talking about it. The cleanest, purest way to trade this is to just short the bonds. Okay, so here's TLT, and that it reversed and closed lower. You see this low. I think we're going to make a new low in TLT, which means higher yields. So eventually, I think it will have some impact on prices as people start to readjust to higher rates. It might be just one more hurrah above this level here, but Right now, all we've done to work off this whole overbought move in yields is to move sideways. So we've corrected this overbought condition, not by declining, not even a minimum 23% of this move. We've corrected this move, not by a fib retracement of 38% or halfway back or 61.8 back, a complete sideways channel, which normally that's not how markets top. They could be distribution top, but normally they top. An expression that I learned many years ago is that markets top with violence and they bottom in silence. So the bottoms are real quiet. There's no interest in the market. And that's how you get those long-term saucer bottoms in the market. And when you get highs in the market, you'll get a sharp sell-off and then another sharp rally to a new high and then another sharp sell-off and then another rally to new highs. This is very orderly, and my bet is that yields over the next several weeks make new highs. So what's that going to mean to me in currencies? I would say that if you think the dollar is weak, my God, how much weaker is the yen? Because when US dollar yen is going up, that means that the yen is weakening. When US dollar yen is going down and people are buying it for risk off or safety, that means the yen is getting stronger. So despite dramatic weakness in the dollar, we're not quite at new lows. The Japanese yen is well off the lows that it made at the beginning of the year. And in fact, tagged 61.8 here on Friday and bounce, not to the same degree, but there is a pretty good correlation between US dollar yen and higher rates normally translate into an even weaker yen. So I'm pretty bullish yen. If I wanted to fade dollar strength, it would be here in US dollar yen. So I just wanted to point that out to you. I think that the yen has a chance to take out these highs. We have a confirmed high at the top right here at the high. Here's your daily. Look at this. Pretty good momentum up here at the high of the move, and this was pretty impulsive. It got from point A, and this was something I showed on TradeGate Hub many months ago, was this falling wedge breakout. Of course, I didn't ride it all the way up here, but I did identify the turn and made some decent pips on it. It is possible that this could be A, this could be B, and we could pull back to 106, but um, for right now, I'm thinking that we're going to hold around this 61.8 level, um, and that we're going to head higher back over 109 to do the trick for another push up in US dollar yen. This is really the story of the day is in cable, and it's because of the elections, and we're almost at new highs in cable. When you look at the recent high of 141, we've actually gotten through the 78.6 level here in cable. I can't short it. Sometimes there are market situations where you don't feel like you can chase it and just buy it, and yet it's too strong to fade it, to fade the momentum and short it. So for right now, I'm standing aside. Support should be at the big round number around 140. We'll see if we pull back and test that. That would be back around this 61.8 level. Okay. Euro, new recovery high. It's actually lower today. And with what the cable is doing and Euro is doing, big down day came in euro pound. Could never get through it. I actually thought we'd get through this. Look at uh, Friday's close. So, the big move in cable and marginal move in euro is pushing this down. So, if we're still heading down and heading down to new lows to 83, something I've been teaching here online is that your preferred short now is euro, and it has been. for all of this time as EG is heading down. I know someone talking about 83 being an important level. I'll probably have to go to the weekly to where it may bottom again. Okay, so here's 83. This is what some people are looking for. I think if it gets all the way down there, it probably takes these lows out. So anyway, with Euro being the preferred short, where do I want to do it? Especially, everyone's bearish a dollar now. You have about, I think, 75-80% on the DSI bullish Euro. So this is what I'm going to be keeping an eye on in Euro in the days ahead and weeks ahead. You guys remember I showed you this rising wedge that we had the breakdown from. So sometimes what could happen is when you extend out a wedge line like this, that it could rally back towards it and tag it and then come off. And to me, that looks like that's going to come in. Let's take a look at it. A little over 122, maybe 2250 in the days ahead. So I want to see this happen. Okay, so there's a line and the extension there. But what about this tells me not to do it yet? Okay, so we made a new recovery high. What did the RSI do? Correct, it confirmed. It made a new high. So for me to be interested, besides tagging this wedge line, I need to see the Euros start to do some work up here and distribute. And then when it makes a new high, be under the 70 RSI level. There is no divergence here yet. Okay, there is no divergence here yet. That's on the 4-hour time frame. Let's look at the 2. Confirmed high on the 2. Even very short term, the 15-minute, I believe, is one of the only ones. So we are diverging on the 15-minute. Let's look at this. So, yeah, we haven't made a new high in a while, but the 15-minute is, you need to have some longer term time frames line up. So at 22 and a half, maybe 60 pips, the 15-minute most likely won't confirm, but I want to see a little bit of a pullback and then a high up towards this wedge line above 122, and I'll probably probe the short side for the euro and the dollar. That's really quite a contrarian trade. People talking 88 and a half or so on most of the indexes, including the dollar index. It's down here, as you can see in the dollar. They're trying to turn the dollar here, but look at this RSI reading on the 2 hours. Same thing. A little divergence here, but not ideal. My ideal setups for divergence is when we're making new lows, the RSI stays above 30, and that's not the case. So what do you do if you feel like it's too late to sell something, too early to buy something like the dollar, and similar situation in euro? You do nothing. That's the hardest thing for people to do, is to be patient and do nothing. They'll start scanning their screen. I got to find a trade. I got to find a trade. Then you're forcing things. Then it's impulse trade. So I have some trades planned from the weekend. I said, I plan a lot of my trades. It helps me avoid impulse trading and FOMO, because if I didn't have it planned on Saturday and I just walk in and I look at my platform and I go, well, that's a good shot. That's not a planned trade. That's an impulse trade. So I plan this trade to, see what's happening up there in the euro. When we get to the wedge line above 122 and a half, that's a planned trade. I'm also monitoring the yen for a potential buy because of what I see in yields. Aussie, same thing. Too much momentum to fade it, and I'm certainly not going to chase it. It's 78 and a half, 78.70. over 100-point advance, pip advance since the NFP. Similar situation in the Kiwi, although the Kiwi is not showing as much momentum as the Aussie. So Aussie Kiwi is still working to the upside as Aussie is outperforming the Kiwi. So Kiwi might be a candidate before Aussie because the RSI is really not confirming, barely confirming on the 4-hour, and the 15-minute. It's not confirming either. So the Aussie is on my list for potential short in the commodity currencies. CAD, there's no end in sight. In fact, this is one of the nicest divergences we've seen for a while in Canada. So everyone see this. So this is this is drive 2, it looks like to me. Maybe we get a bounce and then another wave to the upside. The reason for some strength that we've had in the oil market today is what happened with the pipeline that we're having problems with on the east coast of the U.S. and it's how long it'll stay getting a nice break. So they're saying it's not a big deal. That's the way it's acting here. Perhaps we're putting in a right shoulder. It looks like it could go either way, where we could have 1, 2, 3, or this could be the beginning. And this is something we caught from this candle. The recommendation was a sell. For those of you watching this live stream on YouTube, after the broadcast, some of the markets that I'm discussing when I'm live here, I'll update with charts, with suggestions on, where I think markets are going and how to approach them. But you're going to have to come to TradeGate Hub, and you'll see it in main chat. I don't post those kind of things on the YouTube page where you guys might be commenting. So go ahead and register for TradeGate Hub, and you'll not only see my posts, you'll see posts of other professional traders from across the globe, as we have coverage in Asia, Europe, and the US. So this is kind of a disappointment for oil bulls that thought they were going to get a huge move out of the news this weekend about a hack on a major oil pipeline on the East Coast. So, sometimes you have to wait to see how a market responds to it. This is not healthy. It's probably, if you're a crude bear, you could, just short it being wrong over this high. Okay, so that's my view on crude, and that's probably why Canada is trying to turn. You're getting a nice little reversal candle, but boy, that's, really on this very low momentum. A reading under 20, you won't see me buying a reading under 20, and you won't see me selling a reading over 80. Just too much momentum. It may work for 10, 15 minutes, maybe a day, but I need the market to be showing some inherent weakness with the structure of momentum to be shorting it, and some inherent strength. And a reading at 20 or lower is exactly the opposite. I was taking a look at the Swiss, and despite a strong dollar and short term, we're not getting any real good divergences here either. Same situation as Canada. But as you move out in time frames, the picture changes when you look at it daily. So Canada is making consistently lower lows, where the Swiss is trying to, it's a little bit under 61.8, which shows more inherent strength than the Canada, but your strongest dollar pair is still the yen. Okay. So I would rank Canada as the weakest, US dollar Swiss, uh, not as weak, and the strongest dollar pair, that I see that I trade is US dollar yen. So US dollar yen is my preferred long for fading the dollar at this point. Everyone with me? Any questions so far? Okay. So let's move on to the gold. And I know everyone's really excited about the gold, and gold's making new highs for this rally. It held 1760 like a champ, even with the stop hunt. And now we're above 38%. Okay, we're above 38%, but I have some moving averages here. Short term, I don't have much in the way. I'm starting to get some divergence in the gold on the 2 hour. Let's see, the 15 minute. 15 minute, we're getting it, not in the 4 hours. So just the 1 hour. But look at silver. Okay, diverging on all time frames. And if you go to TradeGate Hub, well, you'll see that I put out an idea earlier in the day before I came on the air to short the silver because of this. I'm seeing relative weakness in silver compared to gold. Look at that candle in silver and look at that candle in gold. So what's your preferred short? Right. So silver looks negative to me. We're playing right around this 61.8 level. Take a look at from the highs that we had at the $30 level to the recent lows around 24. We're trading right around this. I think it's 27.65. So intraday we've been above it, but I think there's at least a scalp, and higher yields I think will eventually matter in precious metals, because when rates are zero, there's no opportunity cost because metals pay no yield in a yield starved environment. So going into the beginning of the week, silver was a short that I pulled off, and we'll see how much more gold has. I do expect some selling to come in starting around the 1850 level, but I'm going to stick with the girl that brought me to the dance. And so far, I have a successful scalp. In fact, still up 11 cents if you took the trade. Really not much of a drawdown. I sold it at 75. It's posted in the main chat. The high was 87. I sold it at 75. So I had about a 12-cent drawdown because I think it happened after I put the position on. Yeah, I put the position on here. We had one more rally. Look at this. Now you have 20 cents in silver. Now you have 22 cents in silver. I'm a big believer in taking partial profits. Even if silver is going to really break hard and there's going to be a real big move, like back down to, 25, or, if you really want to get bearish, you could say that this whole thing is a failing rally, and we could still end up having something like this from here, which would take it under the 24 low and most likely bring it down to around $23. But if you're up 20 cents in silver and you don't make money because you're not taking partial profits and the market returns to the level you got short at, you've accomplished nothing today. So you get paid on something. And then if the market continues and just and craters, right, you're going to get paid and trail your stop to break even. So if it keeps going, you're still there. And then if it recovers after you've put some money in the bank and you still believe in the position, you're recommitting with profits rather than principal. And if not, if you just trail your stop to BE, you've taken all the risk out of the trade. And your worst case scenario is you make money. Who would like to be in that position of the worst case scenario in a trade is that you make money? And that's what taking partial profits will do for you. Don't be all in, all out. You'll also notice that on my entries, I don't go all in. So on my exits, I don't go all in. Okay. So decent trade if you took it. And we'll see what happens in the coming days. I'm starting to get a vibe that this gold silver ratio is trying to turn. And silver is more of a industrial and gold's more of a monetary metal. So perhaps the weakness in silver, and if this is going to head up, the gold silver ratio makes gold your preferred long and silver your preferred short, right? So if this spread is starting to turn, then it's right to stay short silver. Maybe we get a bear market rally back to 72, or when you look at the weekly, this is putting in a higher low. Maybe it's 75 that we get a bear market rally, and that would speak to weaker silver. And let's face it, the Reddit guys are, they're trying to squeeze the silver market. They're going to find out that trying to squeeze a global commodity market is a lot different than trying to squeeze an individual issue like GameStop, which are not having that much success after that initial parabolic move anyway. Um, See what else I've been looking at Bitcoin, and I still think that we have a potential failing rally in Bitcoin. I know that we've recovered here, but I don't trade it. It's too wild for me, you know. And if you trade it, you have to do it with reduced leverage. But I'm going to wrap it with this that we've tried to recover. I wouldn't be surprised if it's some type of 61.8% retrace here, and this is where I would start getting interested in buying crypto. Okay, Bitcoin. And Ethereum's been blasting off, and you're getting rotation. It's interesting how a new asset class like this is taking on characteristics of legacy markets like stocks, and everyone's familiar with the word rotation, but rotation is happening among cryptos. I'm not sure what Doji is doing after Elon's performance on Saturday Night Live, but he was pretty funny and took on a lot of characters on Saturday Night Live, and I'm just wondering what kind of medical marijuana he uses before he goes on stage, because he sure seemed zoned out there. So that's going to be close to a wrap on the day. So S&Ps are failing. Um, VIX still needs to maintain a close over 19 or 20. It did it for a day and gave it up. Just want to show you guys that despite the S&Ps making new highs, the SQQs held exactly where they should have at 11. They take out 11, and then I think we could see new highs, but so far this looks like an ABC, and this is like the triple bearish triple Qs, and we start closing under over 12. This ETF has some real nice move to move, maybe initially towards its gap at 13. So I always end my broadcast with, I know that we're very much tuned into making money in the market, pulling pips out of the market. But I just want you guys to keep your balance by not just counting your pips, but counting your blessings. Also, here's the word of the day and week and year and of your whole trading career. Write it down. Next. Okay, so you don't dwell on a trade, winner or loser. You're like a professional athlete. If you make a bad play on the field, where you don't go back and commiserate with your teammates and go, oh, I should have done this, I should have done that. No, it pays even in the markets to have a short memory and just move on to the next trade. So remember, Next is a very important word for a trader. The only reason you want to look back if you're journaling is so that you know what you did right so you can repeat it, and what you did wrong so you don't do it anymore. So, signing off today. I'll see everyone tomorrow. Good hunting the rest of the day, and encourage everyone watching us on YouTube, give us a thumbs up and come into TradeGate Hub. If you're a trader, share your work. Who knows? You might get discovered and someone might give you a lot of equity to trade. And that's a wrap for me, everyone. Have a great day. I'll see you tomorrow.